China is engaged in a whole-of-state effort to become the world's only superpower by any means necessary.
I think China is playing the long game here. If they want to be the #1 economic power in the world.
Surrendering to China now might be their best option. Otherwise, the cost will only continue to rise. Many people are curious about who has won or lost in the 6-year-long trade war between China and the United States. Let us answer this profound question by jumping to the conclusion right away. 2025 might be US's last chance to surrender gracefully. If US delays further, the consequences will only become more painful. The U.S. China trade war, which began in 2018, was not an ideal time for either country. For China, our industrial upgrading had not yet shown significant results in 2018, and we were still dependent on others in high-tech fields. If given the choice, we might have preferred to continue developing for another decade and face the US in 2028. For the US, 2018 was also not the best time, as China was already the world's unrivaled industrial superpower. Historically, there's almost no precedent for an industrial hegemon losing a trade war. If the US had a choice, they might have preferred to act a decade earlier, in 2008. This is the reality of great power rivalry. Your opponent won't wait until they're fully prepared to strike. The competition between nations is not a game, it's a life and death struggle. Under these circumstances, the US and China began their trade war in 2018. At the time, the US was overly confident, believing that their dominance in GDP and high-tech would quickly force China to submit. U.S. officials boasted that it wouldn't take long for China to come begging for negotiations.
In the Oval Office for his second term, U.S. President Donald Trump has been spitting fire, especially on trade relationships, where he feels America is being ripped off.
They imposed tariffs and restricted China's access to high-tech, targeting companies like Huawei and ZTE. The U.S. knew that China's economy heavily relied on exports. If tariffs made Chinese goods too expensive, the economy would suffer. Additionally, Huawei's rise symbolized China's growing high-tech capabilities. By controlling Huawei, the U.S. hoped to deter other Chinese companies from pursuing technological advancements. However, after a year of trade war, China's economy proved resilient. During the 2019 National Day Parade, China showcased its strength, boosting national morale. When the trade war didn't yield the expected results, the U.S. began to reflect and realize that China's industrial capacity was too strong. China's position in the global supply chain was irreplaceable. Even if the U.S. stopped buying Chinese goods, other countries would eagerly step in. This realization led to a dilemma. How could the U.S. counter China's industrial strength? They couldn't just launch a nuclear strike to destroy it. Then, at the end of 2019, the COVID-19 pandemic struck.
Tonight, a crucial test in China's biggest cities that have been in virtual lockdown to keep the coronavirus from spreading.
People are still taking a lot of precautions. The streets here are unusually quiet. It's a city of 23 million people. It's like small town traffic.
Severely impacting China's industrial system and slowing economic growth. It seemed like the U.S. had achieved its strategic goal overnight. However, 2020 marked the beginning of their nightmare. China quickly controlled the pandemic and resumed production, while the rest of the world struggled with lockdowns and supply chain disruptions. Even the U.S. was overwhelmed, with its military even producing masks. In an unprecedented turn of events, countries lined up to buy Chinese goods. China single-handedly took on the role of global industrial production. By late 2020 and early 2021, Chinese ports were bustling with cargo ships, and even the U.S. was frantically purchasing Chinese products. By 2021, the U.S. was stunned to find that, despite years of trade war, trade between China and the U.S. had increased to $560.1 billion, surpassing pre-trade war levels. China had once again become the U.S.'s largest trading partner. This outcome left U.S. officials speechless, but worse was yet to come. The massive printing of money and increased tariffs on Chinese goods led to skyrocketing inflation in the U.S., reaching a 30-year high by the summer of 2021. Facing this crisis, the U.S. had no choice but to lower its pride. In July 2021, U.S. Deputy Secretary of State Wendy Sherman visited China, uninvited, seeking negotiations. During the talks, China presented 2 lists of demands and set 3 red lines, which shocked Sherman. Accepting these conditions would mean acknowledging China's rise as the world's leading power. something the U.S. was unwilling to do. However, the U.S. had no real leverage. Their primary goal was to convince China to absorb their inflation, similar to what happened in 2008. China saw through this and rejected their proposal. Despite this, the U.S. continued to extend olive branches, including President Biden's phone call with Chinese leaders and the release of Huawei's CFO, Meng Wanzhou. However, their domestic inflation problem persisted. By early 2022, the U.S. decided to take drastic measures, using its dollar hegemony to aggressively raise interest rates. Historically, this move had benefited the U.S., but this time it backfired. The global economy, already weakened by the pandemic, couldn't handle the pressure, leading to a shift away from the dollar. Countries like Russia, Saudi Arabia, Iran, the UAE, and Brazil began forming a de-dollarized economic cooperation system, with China supplying industrial goods, Russia and others providing oil and gas, and Brazil supplying timber and agricultural products. This system created a self-sufficient industrial and agricultural trade loop, significantly reducing the dollar's dominance. From 2022 to 2024, the U.S. only managed to destabilize a few economies, like Sri Lanka and Argentina, but at the cost of undermining the dollar's global standing. Meanwhile, China achieved several historic milestones. Huawei broke through Western technological blockade, boosting national confidence and rendering U.S. blockade ineffective. China's new energy vehicle industry flourished, marking a significant step in industrial upgrading. Additionally, China's Chang'e 6 lunar mission showcased advanced technologies, some of which even surpassed U.S. capabilities. Comparing the situation in 2024 to 2018, it's clear that the U.S. has effectively lost the trade war, though they refuse to admit it. Just like the Korean War, the U.S. is left with little to show for its efforts. Surrendering to China now might be their best option, as the cost of continuing will only grow. Let's start with the tech war, particularly in semiconductors, a key area where the U.S. tried to restrict China. From 2018 to 2025, China's chip self-sufficiency rate rose from 5% to 30%, with breakthroughs in lithography machines and other critical technologies. By 2024, China was not only self-sufficient, but also exporting chips globally, a nightmare scenario for the U.S. In the financial war, the Federal Reserve has been cornered. Despite aggressive interest rate hikes, China's economy remained resilient, expanding its trade and industrial output. The U.S., on the other hand, faced mounting debt, with interest payments surpassing $1.05 trillion in 2024, second only to military spending. The U.S. financial hegemony is crumbling, while the yuan's international role continues to rise. In terms of industry and military, the U.S. is also losing ground. Its industrial base has hollowed out, with labor disputes and declining capacity. In contrast, China is the world's largest industrial producer and the core of global supply chains. Militarily, while the U.S. spends over $1 trillion on defense, its ability to sustain a large-scale war is questionable due to domestic issues like inflation, debt, and social division. To sum it up, now is the best time for the U.S. to surrender for 3 reasons. Its economy cannot sustain the current trajectory, with rising debt and industrial output being outpaced by China. The tech war is out of control, with U.S. policies accelerating China's technological breakthroughs. The U.S. lacks the industrial and military strength to support a prolonged conflict. Surrendering now would allow the U.S. to save face. Delaying further will only lead to greater losses. The future belongs to China as it continues to rise in trade, finance, technology, and industry. The U.S., on the other hand, faces a critical choice in 2025: surrender gracefully or face even greater consequences. What do you think?